Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, key aspects of the US economy seem mired in weakness. The latest factory PMIs for the US show their expansion has ended, with this index level dipping to a stagnant 50 between expansion and contraction. And that is a 10-year low. Their service sector is still showing a modest expansion, however. New home sales in the US in June came in 4.5% above the level for the same month a year ago, better than the year-to-date rise of only 2.2%. In China so far this year, almost 300 property developers have been declared bankrupt as tighter regulations bite. Tighter financing rules aimed at preventing excessive investment is squeezing cash flows. Development in the wrong places is also an issue. Japan's July PMIs are similar to the US, but their services PMIs are expanding stronger. In Europe, their July PMIs show a contraction in their manufacturing sector, and that is deepening. But despite all this core weakness, equity markets are generally near or at all-time highs. The S&P 500 is up 0.3% today, even though some iconic listings are delivering weaker than expected profit results. European markets are up a similar amount. Yesterday, Shanghai was up 0.8% and the ASX was up a similar amount. The disconnect with real economies in all these places is hard to fathom. Long-term low interest rates have generated desperate hunger for any yield, juicing multiples into the stratosphere. The resulting imbalances are stark. In Australia, both their factory and services PMIs are still expanding, even if the rate is slowing. And the new APRA rules on banking compensation are already being declared a failure, even before they start. Industry insiders say that they are likely to incentivise even higher pay for incumbents. And US Treasury 10-year yield is marginally lower today at 2.05%. Gold is up $2 overnight to $1,421 an ounce. US oil prices are soft today, down more than $1. Just over $55.50 a barrel, while the Brent benchmark is softer as well at $62.50 a barrel. And the Kiwi dollar is unchanged, still at 67.1 US cents. On the crossrates, however, we're much firmer at 96.2 Aussie cents, which is a half a cent gain and a 4-month high. Against the euro, we're up slightly to 60.2 euro cents. That firms the trade-weighted index to just on 72.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.